Hey guys, it's Nick. With the US stock markets closed today, there's big news about the Russia-Ukraine conflict. In this video, I'm going to talk about what it means politically and what effects it may have on the US stock markets. Also, I will look at Russian stocks to see if they are a good buy on this bad news as a contrarian investment. I'm going to look at what happened in 2014 when Russia was sanctioned over the whole Crimea vote and annexation thing and see what the experts were saying about investing in Russia at that time and how Russian stocks actually did after that. You might be very surprised. So today, President Putin signed decrees recognizing independence of Donetsk People's Republic and Lugansk People's Republic, as well as treaties on friendship and cooperation between them and Russia. Putin has also ordered the Russian military to secure the peace in eastern Ukraine's breakaway regions of Donetsk and Lugansk. So from a Russian point of view, they are not invading Ukraine, they are securing the peace in these newly recognized republics. I'm sure the US and the Ukraine do not see it that way though. So here's a little history, but I'm not going to get too deep into the whole history of Ukraine and the Soviet Union and Russia and all of that. Donetsk, Lugansk, and Crimea declared their independence from Ukraine in 2014 after the 2014 Ukrainian Revolution. In 2014, Russia annexed the Crimea Peninsula and established two federal subjects there, the Republic of Crimea and the federal city of Sevastopol. But the territories are still internationally recognized as being part of Ukraine, even after a vote where 96% of the 80% of Crimeans who voted wanted to be independent from Ukraine. Now, Crimea was first annexed by Russia's Catherine the Great in 1783 from the Ottoman Empire. And that led to the Russo-Turkish War in 1787 and the 1792 Treaty of Jassy, which reaffirmed Crimea as being Russian. But in 1954, Nikita Khrushchev gifted Crimea to Ukraine when they were both part of the Soviet Union. The issue with the breakaway republics is part of a bigger issue of Russia demanding that Ukraine not join NATO, because that would mean nuclear missiles would be placed right on Russia's border within reach of Moscow in just a few minutes. And so this is the same concern that the US had in 1962 during the Cuban Missile Crisis, when the Soviet Union placed nuclear missiles in Cuba that can reach the US in a few minutes. This first strike capability advantage is the main reason why Russia is digging in their heels about Ukraine joining NATO. So what's happening now in Donetsk and Lugansk is similar to what happened in Crimea, for which Russia had many sanctions placed on them back in 2014. Now, I know this is a very generalized version of this complicated situation, but this video is more about what happens to the US and Russian stock market in this situation. So first, let's look at what the reaction will be in the US stock market according to a recent Goldman Sachs report. And although the US markets are closed, the futures are still trading, and so Dow futures are down 300, NASDAQ futures are down 260, and the S&P is down 54. And so in the Zero Hedge article, they say Goldman calculates how much various risk markets will move under a Russia-Ukraine war. And so they say Goldman published a note analyzing how much geopolitical risk is priced into global assets and finds, among other things, S&P could drop 6% in a potential downside case or jump 5.6% in a de-escalation scenario. And so here they even have a table for all different indexes and assets. So let's take a look at gold. They say it could go up or down about 5%, while oil could go down 12% or up 13% in the worst case scenario. And as for the Russian ruble, they say it could go down 9% or up 10% from here. So back in late 2014, early 2015, when the first Russian sanctions were hitting Barron's had an article, taking stock in Russia. No, that's January 30, 2015. And here an expert said, I was starting to play with the idea that Russia may well be the next big buying opportunity, but I am now forced into backtracking myself. So basically they're saying don't buy Russian stocks here. Although Mark Faber was saying Russian assets are close to their buying range, and this was January 13th, 2015. And Morningstar is saying too much risk in Russia, January 12th, 2015. So let's look at a chart of the Russian stocks at that time. So here's a look at the Russian ETF that trades in the US, RSX, and it was trading as high as about $26, $27 back in 2014. And when the sanctions hit, it went as low as about $12.50 in December 2014, right before all these negative articles came out about investing in Russian stocks. So let's see what happened after that. So by May of the next year, 6 months later, it was up to about $20. So about an $8 gain, or about a 70 or so % gain from the bottom when everybody was fearful of buying Russian stocks at the time. Now, the Russian stock market on Monday closed down about 10.5% on this news. And so tomorrow, Russian stocks will most likely open down in the US markets. So are they a good deal? Are they cheap here, or should you stay away? Let's take a look. So here's a look at SBRCY, SBRCY, which trades as an ADR in the US. They have a PE of only 4.6 and a dividend of almost 8%, and it will probably be 9% when it opens up on Tuesday if the stock drops another 10% or so. And so they have 280,000 employees. They're the biggest bank in Russia and 14,000 branches. And they also have operations in 18 countries internationally. Norilsk Nickel Company, NILSY, has a PE of 6.64 and a forward dividend of 12%. And so they are a nickel mining company in Russia. LUKOY has a 7.85 PE and almost a 9% dividend. Their symbol is LUKOY and YNDX, YNDX. They are like the Google and Yahoo and Uber and fintech company of Russia. So you get kind of all of that stuff in one. I see they lost money here in 2021, but their revenue has been growing and their earnings in the previous year were pretty good. And they are actually headquartered in the Netherlands. And so they operate search and portal, taxi, Yandex Market, media service, classified, and other bets and experiment segments. And they also develop fintech offerings to integrate payment and financial services across its services. So you can buy those stocks individually if you're interested, or you can just buy the RSX ETF. And here it says the yield is 2.75. That's not accurate. It's more like 7% or so based on the last dividend that they just gave out, I think, in December. And so here are their top 10 holdings, which is 60% of the whole fund. And you see this ETF was, what, $33 as recently as October. And it has fallen as low as about $21 in the last few weeks. And now it's sitting around 23. So I imagine it's going to retest these 21 levels and possibly even go a little lower, depending on how bad this news is or how things develop in Ukraine and these breakaway regions. So with all the bad news out there about Russia, it may be time to buy some Russian stocks. If this thing de-escalates, these stocks can go up a lot. If it doesn't de-escalate and we go into World War III, then you're not going to worry about your stocks anyway, right? So if you are a contrarian and you want to put some money in Russian stocks while there is bad news out there, it may be something to look into. Now, of course, this is not financial advice or a recommendation to buy these stocks. I'm just looking into it for myself. And my opinion on this may change in 5 minutes, 5 days, or 5 years, depending on how this plays out. So do your own research. So guys, let me know in the comments below if you think Russian stocks are cheap or if they are way too risky and will fall even more from here. I hope you liked this video, and I'll see you in the next one. Thanks for watching, guys.